I'm Art Halleran, the CEO of Trillion Energy. We are drilling our natural gas offshore Turkey in a very high gas environment. We expect to be drilling 17 wells. We're all fully funded, and we started drilling actually yesterday.
Well, hot off the press, hot off the press. Thanks for coming on, Arthur. I appreciate you making the time to do that. We saw you back in May. Pretty strange markets back then, given what was happening in Russia, Ukraine. Even stranger markets now. How are you reading the situation?
Well, since May, we went from about $18 an MCF US to now we're at over $30.68 an MCF. And at the same time, what I found if you want to talk about the security market and so on, we had decided to do this project before COVID. We struggled through COVID. And so we were happy. We were getting $8 to $9 an MCF. And when we did our first raise would be around just in early February. We went and put the things lined out, the price and so on. And then the Russian invasion of the Ukraine happened. We raised that money. And so what's happened is we've actually come out of the storm drill ready with a lot of gas that's already proven, an existing facility. The rig drilling, any other company that happened to be stalled over the COVID or either one broke or put things on the burner now are going to have to do catch up, maybe 6 to 8 months to a year. Whereas now we have very good investor eyes on our company. Both times we're oversubscribed. We get calls every day, and we're in a $30 MCF environment, which is an excellent situation for the company.
Oh no, it really, really is. And I say, kind of, we'll call it in the first group, a first mover advantage for you in that sense, because you're not only were you able to pick this stuff up cheap for cents on the dollar, but you're also sort of, right in the middle of a kind of high gas price environment. You've taken a little bit of advantage of that, and I want to try and understand how you play this, right? Because I think that we're kind of, all of us dusting off a few cobwebs in terms of investing in oil and gas, because it's been a while since the market has been in a position where it's looked attractive, unless you're a contrarian, of course. So you've raised some money. You raised how much money recently?
So we've raised now would be probably 41 million Canadian, and so that meets our $30 million US to do our program A. And then program A, in the $30 environment, because we're going to be putting the gas on right away, we generate enough revenue to fund program B. So we don't need to go back and get any more money.
Well, from memory, last time around you told me it would be sort of 2 to 3 months payback at $18 per MCF, and obviously at 30, I guess things are meaningfully different because, what is the payback now? What's that looking like? Have you done that calculation?
Yeah, I think when I talked to you, we were talking about, within a matter of a few months. So say an example would be, by the time we finish program A, which would be now it's May 2023. We started off saying we're going to be making about $4 million free cash flow a month. And now it's 3 times that. So now it's $12 million a month. And at the end of program B, which is going to be in the future, but basically June 2024, it was projected to be 7 to 7.5. And now we're into the 20s. So when you go back and you say, okay, before, we're going to get a quick payout. Well, now it's a well cost between $8 to $10 million, and we're going to be making free cash flow very, very fast. So it's about a 3 to 4 month payout with the wells and so on. And the other issue that's really important that I forget to mention is that all the money we raise is going into drilling the wells and bringing the gas on. We don't need any extra capital to put any more facilities like more pipelines or anything, because we're actually drilling off the platform. And like you say, we got this facility pennies on a dollar, but it's in really good shape. So again, that's the reason why it's a quick payout, is because there is no large facility capex.
Right. Okay. And I kind of want to get onto the drilling component, but you've also got to do this in the context of understanding the market conditions. You've talked about the price move from 18 to 30. Great. But it's a very sort of tumultuous marketplace out there. It's very fluid. Let's call it like that, because no one in Europe is quite certain of what their energy security or their energy policies will be, because obviously Russia is kind of cutting off gas supply heading west. And most countries don't have a kind of plan B, as it were, yet. Not so conversations around nuclear, which is great, or LNG potentially, but nothing that's going to be a quick fix. So sustainable pricing in the region. I know you're predominantly Turkey, but it's sort of, most people would view that sort of Eastern Europe. How long do you think these prices sustain? Do they go higher? And what happens if they come back down? Where do they go?
Yeah, I think like for the winter, they're going to stay up in the $30 range. And we've got told that it'll probably increase 10% a month because we get a new price every month. And in the long term, what I mean by long term, it's not really that long. It's 2 or 3 years. I don't think any of the problems are going to be solved. It might not be $30. It might be $20. We look at, we say, okay, what about we're going to get $26 and then $18 in 2024, that kind of thing. It's still really good because you have to remember we were very, very happy at $8 to $9. The economics were really stellar. So 10, 15, 20, I mean, that's really good for us. I don't think it's going to go below 20 for the next couple of years. And these reservoirs are conventional reservoirs. They will produce, like I said before, 60 to 50% of their total volume of gas in the first, 4 or 5 years. And a large percentage of that is in the first couple of years. And so we will be cashing in on the high gas price. And that's why it pays out so well, and we'll be just filling our bank with cash for future work.
Right. So the decline levels work in your favor in the sense the first 2-3 years you get the bulk of the gas out. Filling your coffers. Okay, was nice. Companies that make money sort of seem quite rare in the public market sphere. Okay, filling your coffers, or do you take that cash and ramp things up quicker? Because I'm trying to understand the model you described to me last time. So, do you buy these rigs? Do you lease these rigs? I mean, it's not just cash build. What's the kind of asset situation look like in 3 years' time? Yeah.
So, I mean, you're correct. To sit on cash. Is not good business, right? You got to invest cash to get a good return. The rigs, they're actually owned by a drilling company in Romania. And so we rent them. We sign a contract, we guarantee them a certain fee, but it's basically rented per day. And so I treat SASB as the cash engine to generate activity. And so to accelerate the program, there's two aspects of it. One is to accelerate the program. The other one is to look for other opportunities. And I have many shareholders contacting me and saying, look, is there any way you can accelerate the program? And if I was a lazy guy, I would say no, there isn't, because we have everything worked out for one rig, and that's all there is. But they bring up a valid point. The valid point is nobody can predict what the future gas at 4, 5, 6 years down the road is. We have a good idea what's going to be 2 or 3 years down the road. So what if I can bring more gas on? So program A is set up for one rig. And what I mean by that is our shore baseline is only a certain size. It only can have so much casing and consumables on it. Our supply chain, so when we get new casing and so on, can only accommodate a certain amount. And our manpower. But program B is it's not until spring next year. And some of the items we need to order now. So long story short, I'm looking at it. I'm looking at to see if maybe we can't, do it in 50% of the time, but maybe some of the projects, like there's a pool called Escadale, which is 3 or 4 wells that might be able to be drilled by an alpha barge, which is another drilling program, another drilling vehicle that GSP has. And we can then just kind of have two projects going in one instead of accelerating one project and you have a bunch of logistics. Just say, okay, we're starting a new project. And that logistically is easier. So, yeah, we're looking at that because if we have the cash, why not, right? The other issue is if I have extra cash, I definitely want to start looking at the exploration potential, like I mentioned before, around my block for the larger ones. And I can accelerate that. That's just dependent on the amount of cash you have. And then finally, the other one is going through COVID when the commodities weren't very good. There were a lot of companies that went in distress. And now because we are like the talk of the block, I'm getting companies approaching us with opportunities saying, look, we have this good opportunity. We need money. We need a partner. And so we're looking at those. I'd like to see if I can find a lot in the same neck of the woods I am, like in Turkey and so on. But cash is king. And when you have cash, you have a lot of opportunities.
You absolutely do. There's a lot of cash constrained companies. We've been approached by a few ourselves. And it's the ability to actually work out which have good assets and which do not. It's not just about getting cash constrained. So I imagine you have a lot of data that you've worked through. But can I ask you about something else though? The guys say, okay, you're building a big cash position up. But given the nature of the market for the last 2.5 years, you're probably thinking, as well as this kind of aggressive component, needs to be a kind of defense component in case things go horrifically wrong very quickly as well. So spending $1 to make $3 is super smart. But having a defense plan is also quite smart if things very quickly go wrong. So is that very much in the back of your mind, given where you've come from, or are you full
you're
bull
right.
on gas and oil prices going forward?
Yeah, you always spend $2 and keep one in your pocket.
Makes sense. Okay. So
I call that robbing money because when I lived in Colombia, you keep cash in your pocket and then you keep other cash in your other pocket. And then when you get robbed, you just empty the cash and you say, that's all I got. And they're happy and they leave. But you haven't given all your cash because you have the other one in the other pocket.
When I was doing oil in Kazakhstan, they had to have it in 4 different pockets. They twigged the 2-pocket thing real quick. Right. Okay. So drilling started yesterday. 17 wells on Plan A. Is that? Sorry, I want to be clear. So Plan A is 17 wells.
Plan A is 7 wells.
7.
So it's 2
sorry,
wells.
I misheard you at the beginning. 7. Okay.
Yeah.
Right, and the time frame for that is through the spring next year.
Yeah, that's correct. Yeah.
Okay.
So
fine.
it'd be. Yeah.
So explain to me what that looks like in terms of the spend, because you're obviously making money, plowing it straight back in. So time frame spring next year. So the wells are coming out at what per well? How much?
So they will test 7 to 10 million cubic feet, but we'll probably put them on at 4 to 5. I mean, you can, if you have a few wells, you can ramp them up, but I think 5 million cubic feet would be good. And so half of that would be ours. So for every well, we're going to be putting in our pocket 2.5 million cubic feet. And the way we figure it is that we won't get too much in 2022, but we should have 2 wells on. And by the end of 2023, we should be upwards. This is our interest. So 4 million cubic feet per day by the end of this year. And then the end of 2023, because you also have that decline rate, you're probably looking at 14 million cubic feet per day. And then the exit rate of 2024 is in the order of maybe 20 to 22 million cubic feet per day.
Okay, that's right. So you got the 49%.
Yeah.
Okay.
And the way that works into cash flow is that, again, depending on the cash, because you use $30 all the way through, the numbers are different. So I'll give you a range. We expect to exit 2023 in the order of 75 to maybe 100 million US. And then around 2024, maybe in the order of 125 to 100. And 50 million US, but we put a bit of a lower price in it, but substantial revenue, right?
Right. Okay. Okay. Interesting. Okay. We'll have to take a look, dig around the numbers and try and work out what that profile looks like, revenue profile looks like. Also, we've got some great questions sent in, but I'm sorry, I should have taken, or normally we do take note of who sends them in. So this is someone from one of your, I guess, shareholders or wannabe shareholders. Rig mobilization was 12 days late. Did TCF get the contractual agreed penalty fee?
Yeah, so the penalty fee, so the reason why it was late was initially it was to be inspected and then it was supposed to be sent free. But then there was an issue found with the ballast tank. And so they had to weld it. So the reason is that it's safe, but it has to survive a certain hit. And there was also something with the rotary. So that $95,000 a day is, I would say, is a touchy subject. So we'll get some, but some we won't, because some of the rig. So an example is some of the delay was our cost. So when we had the rig arrive on our property on Friday, they were ready to go, but we didn't take the keys because we said our inspector noticed this and noticed that. And so it didn't actually start spudding until yesterday morning. And so that time there, now we caused that delay, but we caused the delay because the minute we take the keys, we have to pay $95,000 a day, right? And they should have had that fixed before. So to answer the question, exactly how much we'll get, we'll have to work out, but we'll get some. And the other thing is, at this point, I'm not going to really bring it up too much because we have to work with them for a couple of years. But the answer is, yeah, some we get and some there'll be some discussion.
I mean, Arthur, can you just give us your sense of, will you be able to put out more regular updates for each well as you go in terms of these 7 through to spring next year? Or do you kind of want to be able to come and go out them in batches, as it were? Yeah,
so if they mean by updates, if they mean by the news releases and so on, we intend to have with our Trillion dispatch that we give out every week, we'll have a weekly update. It won't be a daily update. And then as we get close to the actual testing, when we do test it, we'll have a news flash on our website and in our Trillion dispatch that'll be out there.
Right. Okay. And with regards to uplisting on TSXV, any plans?
Yeah. So I have a kind of like a pet peeve or a bias. So my bias is what happens is when the shares don't exactly perform like people want them to perform. And so everybody thinks our shares should be up at 60, 70 cents. And I believe that too. And they're at 46 cents or 45 cents. They think the way to cure it is to go on to another board. And the way I look at it is when you want to move your company to another board, you have to have your company pick the board. In other words, your company grows to the right way to pick the board. You don't squeeze your company or change your company to fit the board. And whether we want to believe it or not, we are still I wouldn't say a junior, but a startup type thing. We have a long history and we're just starting to get growth, right? We're just starting to get cash flow. And then the next stage is sustainable cash flow. So if we try to jump to a bigger board right now, the larger institutional investors would look at us still as a startup. They would say, those guys are just little mice. But once we go through the other stages and we show that we have this horrendous cash flow and we proved it, we start getting different eyes on us. And at that time is when you should look at which board, and you need to find the board that fits you. You don't try to fit yourself on the board because you end up doing things like rolling back stock or, that kind of things, which is not a good thing.
Right. So tell me this then. If you do that, now, so you're currently in the CSE, Frankfurt, and the OTC QB, I think, right? So it makes it difficult for some of the banks that may want to bank you to then allocate a broker. I know you've just got some recent broker coverage. I think Bill Newman at Research Capital is now covering you, but have you got that degree of confidence about the amount of cash that you're going to create and the fact that you're you're comfortable if you needed to go to market, say if an M&A opportunity arrived, that you could get that without necessarily having broker coverage?
Yes and no. So an example would be we have enough cash now to do the program that we've outlined, A and B. We're going to be generating over $100 million a year. And that's going to be in a very short time. It's not like 5 years, 10 years down the road. And it's because a BCF of gas is worth $30 million. So if we just wait for a year and a half, we're in complete different situation. And then we can go and, go to a different board and attract the bigger banks. And that might be for, say, the off block where our program is going to be $100 million, but we're talking, 500 BCF. But right now with SASB, we're quite comfortable. Let's get the money and then be able to pick. And also to answer the question, we have had some firms come up to us and say, look, if you need 30 or $40 million, would you be open to it? Or 10 to 20. And at this point in time, we just say, we don't need the money right now, but we're not saying no, right?
Yeah, it's kind of interesting times. And obviously gas is seen as a green energy solution, doesn't have the same problems that oil is facing with some of these big funds and some of the bigger companies. So I guess that's not an issue for you. So you're going to stick with gas, are you? Start with that.
Yeah, like I think gas is the key right now because there's such a big demand for it. But that being said, I'm a petroleum guy, and if there's a good opportunity where I see it really undervalued or an oil property that's not properly developed, and I can get another project for pennies on a dollar or even dimes on a dollar, I won't turn away. It all depends on what you make.
Right, but I guess my question is, has the last sort of year of ESG and anti-fossil fuel rhetoric and narrative, not just from protagonists and NGOs, but also from some of the funds and some of the politicians, and don't get me wrong, I think it's unthinking, but
Yeah.
nevertheless it's there. Does that make you a little bit nervous about going into or potentially going back into oil?
Yeah, well, I guess when I say I'm going back, it would not be in a major way. It would be like dabbling, that type of thing. Like it was a really good situation. But when you look at SASB, the amount of gas we're going to find on our block and the potential off our block, that's a lot, right? And then why work in a commodity where, like you say, people are not really happy about, and you might have difficulty finding the market, whereas natural gas right now, like you say, is the green energy it was used for generating electricity. It's a transitional fuel. I brought my new director is Sean Stouffer. He has a lot of experience in green energy. He's done, I think, 4 or 5 between 200 to 500 megawatt projects on solar, wind, hydro. And then so he's the type of guy I just brought on. He's in his 40s. He was a top 40 under the age of 40 winner in Vancouver for business. He's quite a sharp guy. So that kind of situation, I would look at natural gas deposits that are potentially too small to put a pipeline, to actually start using it to generate electricity in situ, and then just have a power line, right? Things like that. So there's a big avenue to find ways to, natural gas to electricity, right?
I mean, Arthur, can you just help me with something? Because I'm obviously working over in Turkey. You're taking advantage of the projects that you've picked up there. But I'm sort of intrigued, again, in terms of the broader market context. How is North America viewing what's going on over in Europe? And has that result in anyone sort of picking up the phone from North America and trying to, get involved with what you're doing? Let's put it that way.
Yeah, I mean, again, I find that in Europe, it's like, especially like London and so on, there's a larger appetite for investing in places like Turkey because of their backyard. They know that Turkey's part of NATO, and they feel comfortable. With the price of gas, that's kind of like something that prevents people from not doing it. And they look at our project, but not all of them, but a large percentage of them do bring up a question about how is it in the politics of Turkey? Will they, change the royalty regime and take more and stuff like that? But once we tell them exactly that Turkey is a good place for business, we tell them they've never done that in the past, and we educate them on Turkey, they feel way more comfortable. But some are hesitant, but in the end, they realize that Turkey is Europe.
Turkey is Europe, but you've got there's always the geopolitical risk. I mean, if you're talking about energy, there's always geopolitical risk. Always has been, always will be. You've got Erdogan's sitting there with Putin, going, "Don't worry, I'll be a spokesman for him." He does want to pull out of Ukraine. He does, want this to end. That which is, I guess, good news. But that can't help. Really. So does that affect your decision about going on to different exchanges? Because North Americans will view that differently from Europeans who've got a slightly closer relationship with Turkey, and the optics are different.
Yeah, that's correct. Like we would look at something in England if we wanted the board, because number one, the funds are a lot larger and they have a lot better appetite for Turkey. But getting back to Turkey and doing business in Turkey, the oil and gas industry, especially because it's mainly gas too, is only like, I always thought it was 10%, but then somebody corrected me and say, no, it's only like 2%, 3% of what they need and they import. And so even though this project is really good for us, we're like a little fly in an elephant, right? And so they don't really notice us. They want us. Like I went to 2 ministries and they want foreign investments, especially in gas, because they say every MCF that we produce, they can put into their storage or they don't have to buy, right? And so they really support us. I've had a couple of meetings with them and they're extremely happy, especially when I say that, we're bringing in 30 million, but it's going to be a $100 million project. And then TPAO is going to be investing the same amount. So you're looking at a $200 million project, bringing on gas that they need. And so once I put it in that content and so on, we're very stable there. They don't want to bother us or anything, right? And the other aspect of it is when we rent our office building, we have to pay in US. And so all our rig, we pay in US, our pipe, everything. So we have that currency that we're allowed to change our Turkish lira to US because we need to actually bring in equipment and so on to drill. So in Turkey, I feel in the country itself, I think we're quite safe. We're kind of like missed, but we're very important. But outside of Europe, not so much in Canada. Canada seems to have a more world attitude, but a lot in the States, they're really concerned, about the politics of Turkey.
Yeah, for sure. And I guess with the US dollar controlling, not only the movement of oil, but movement of US dollars, it kind of must give some degree of comfort, I think, to anyone. So any large US or North American investors, institutional investors. Interesting times, Arthur. Well, you're making hay while the sun shines. That's for sure. So look forward to sort of seeing how you get on with the rest of this year with the drilling, the rest of these 7 wells that you're going to be putting in, and may the cash continue to flow, sir.
Okay, yeah, thank you very much, and let's have another chat when I have these 7 wells down.
Yes, sir. You can count on it. Thank you very much.
Okay, thanks for your time. I appreciate it.